What if one apartment deal could cover your entire salary? Like crazy. In this video, I'm going to show you exactly how that's even possible with something called a syndication, how that can be used to replace your income in the next 1 to 2 years, even if you've never done a deal before, even if you don't have your own money or anything like that. We're going to talk about how syndications work and why they're the key to scaling faster with real estate, but also without working more hours. I'm going to walk you through the structure, show you how the profits break down, and kind of show you really how it can only take one or maybe two deals to build life-changing wealth. Let's get into it. I'm going to share with you now the secret of how to do this. How can you scale with real estate without having to work harder? How is that even possible? So now we're getting to the secret to scaling with real estate, and it's to leverage the power of syndications. So we just said a big word, so we better define it. So what is a syndication? So at its most basic level, and this is in your workbook, this is one of the 10 key points I want you to remember. A syndication is a partnership between general partners, underlined word is the one I want you to remember, and they do all the work, and then the limited partners who put up all the money. And the second point related to syndication is that this is a way to use other people's money to purchase commercial real estate. It's the way you structure it, the way you do it. So it's using other people's money in a structure of a syndication. So let's look at the structure here. I'm going to give you a 101 here on syndication. It's very important that you understand this stuff because it unlocks the key to larger pieces of real estate. So syndication structure, again, on the left, we have the general partners, okay? And then we have the limited partners. So general partners, GPs, they are the active operators who do all the work, right? They're responsible for finding the property, securing a loan, raising the capital, managing operations, etc. Now, in return for doing all their work, they get sweat equity in the deal, and they get compensated through fees and then their share of cash flow and profits. So if you were, for example, work with us, this is the role we would teach you to play, is to become a GP. And by becoming a GP, you can become financial free in about 1 to 2 years. Now, I will show you that, especially tomorrow on the path to, or in the next training, the path to financial freedom. I'm going to show you how that's even possible. Right? So 1 to 2 years is a very powerful vehicle for general partners. Now, the LPs, limited partners, are the passive investors that contribute all the capital. Now, in return, they also receive a percentage of the cash flow, the distributions, and the profits from the eventual sale. So for their investment, they get a return, typically a 15 to 20% average annual return, which means they can double their money in about 5 years. Pretty good deal, especially since that kind of return is higher than investing in a stock market, which typically, historically, over the last 30 years, returns about 8 to 10%. So it's actually an above average return by investing in these syndications. And also, during those 5 years, they also not only get an average annual return, but they also get cash flow distributions, typically around 5 to 7% of what they invested per year. That's called a cash on cash return. So they can generate wealth, but also passive income as well. And they get incredible tax benefits where they pay few or even no taxes at all. And this is why syndications can be an excellent alternative to the stock market because they can invest passively, get above average returns, cash flow, and tax benefits. And so being an LP is best for high income earners making $400,000 or more, and they don't want to exit what they're doing right now, but they're looking for ways to grow their income and wealth without having to do all the work for it. They want to get into real estate, and maybe they even have a rental property, but it doesn't generate enough money, and it's too much work, right? And so they want to invest in real estate, but they don't want to have to do all the work themselves. So this is why this is really a really good partnership between the GPs and the LPs. And the LPs also are on a path of financial freedom because if they invest in cash flow producing assets like syndications, they can also become financially free in 5 to 10 years if they're systematically reinvesting into that vehicle versus the stock market. It can also lead to financial freedom. So both of these vehicles really lead to financial freedom. And this is why I really like this structure. It's such a great win-win. So let's go through an example here, right? So let's say you wanted to purchase a $4 million apartment building, right? And you would need around $1 million to do that. So by leveraging a syndication, you as a general partner would do all the work and receive 30% of the equity in the deal. Then you find limited partners yourself, or you partner with a capital raiser to get the $1 million you need, for which they get 70% of the equity. Now, we're going to talk about raising capital here in a later part of this training, so stay tuned for that. I'm just building the case here. I'm giving you some introductions step by step so we don't lose you. All right, so that's kind of the basic structure, and this is how you can buy a $4 million deal with other people's money. That's exactly what we would teach you. This is our specialty. So going with this example of a $4 million deal, let's look at it from a general partnership perspective, from a GP perspective, right? So here's how the profit centers break down if you're a GP. The first thing is what's called an acquisition fee. Now, this is unique to syndications, but it's important how that works because this is not, you may have never heard of that. And the acquisition fee is typically 3% of the purchase price. It's underlined, so this is a key point in your workbook. So underline that in your workbook or write it down. Acquisition fee is 3% of the purchase price, which in this case is $120,000 at closing when you buy. So it's literally going to be on the HUD one as a closing cost made out to you and your partnership. And that's you get that right at closing, right? So this is why this is such a powerful vehicle for financial freedom, because imagine that your living expenses are $10,000 per month and you just got $120,000. Right now, you have a 12-month runway. And now that gives you the money to quit your job. Or let's say you have a partner, okay? You split it. That's okay, $60,000 each, 6-month runway. You each maybe have another $60,000, and that gives you the courage to quit what you're doing and focus on this full time. The acquisition fee is the thing that gets you out of your job sooner rather than later. This is the trigger, the powerful trigger that most people don't know about. That is this acquisition fee. Now, it doesn't end there, though, because obviously real estate is supposed to generate cash flow and profits, and it does. In fact, this $4 million deal generates an average of $100,000 per year in income for you and your partner. I always say partner because you're going to see that partnering is a common theme here in this world of syndications, and we're going to cover a lot about partnering here in other parts of this training. So this generates about $100,000 a year in fees, cash flow, and profits. It breaks down like this. So it's about $12,000 per year in asset management fees. This comes out of the cash flow of the property for you and your partner and your company managing this asset through your property manager. It's called asset management. You get paid for that. You're also going to get about $42,000 per year in cash flow. Obviously, in the beginning, it's going to be less as you kind of renovate a little bit and slowly increase rents. And at the end, it's going to be higher. But on average, it's about $200,000 of cash flow over the 5-year hold of this typical deal like this. And that's about $42,000 a year. And at the end is about a $200,000 profit, again, if you hold it for 5 years. So 200 divided by 5 is 40,000 on average. Obviously, you don't get that until the very end. But if you average everything out, that generates $100,000 per year, $500,000 over 5 years. $100,000 is underlined, okay? So $120,000 at closing, $100,000 per average while you're holding it. And so that thing generates about $620,000 a year. It's underlined, so $620 for a $4 million deal for you and your partner. That's a significant amount of income, right? Now, let's play this forward here, okay? Let's play this forward. So let's say you can do a $4 million deal. Now, you might not know how to do it right now because we have a lot to cover in this training, okay? And you're probably going to need some help, and you're probably going to have a partner. But this is very common. In fact, our students, the first deal size they do is a $4 million deal, which is why I keep kind of picking this number, because it's something that our students are able to do. And it's also very meaningful from an income perspective, right? So this $4 million deal now generates $120,000 in acquisition fees, $12,000 in asset management fees, and $23,000 in cash flow distributions. Now, I'm actually going to build you a 5-year model, so you'll see that the cash flow in year 1 is actually lower and then sort of goes up. So this is a more realistic model. So in year 1, from that 1 year, from that first year, from that one deal, you expect to have about $155,000 in income from that, right? So let's move on to year 2. Let's say you buy, I mean, just hypothetically, right? So if you can buy one $4 million deal, let's say that's possible, right? So through, like I said, with some help and some partners and capital, obviously, but let's say you did it. Could you do it again, right? The answer is probably yes, right? So let's just play this forward. Let's say I'm buying one $4 million property for the next 5 years. What does that look like? Okay, so we're buying 5 properties over 5 years. And so you can see here in year 2, you're getting another $120,000 in acquisition fees. And now you're getting 2 asset management fees, $12,000 from the first one, and then $12,000 from this one, so that's $24,000. Then you're getting cash flow distribution from the first one that are now slightly higher because in year 2, and you're getting $23,000 from the second one. You carry the same logic forward, okay? And now in year 5, you're gonna start selling the property you bought in year 1. So you can see now the profits from sales are now $216,000, right? From that first that you bought. 5 properties. So look at the numbers you're making. You're $3 million over 5 years. And that's where this number comes from. And so now with 5 properties, you are, I mean, look at year 2. Like even if you if you don't have a partner in year 1, you already have $120,000. There's already $10,000 per month right there. You have a partner, okay? You have already a partner. In year 2, you guys are done, right? Or by the latest in year 3. So you can see how the numbers start getting larger and larger, which is why I don't need a lot of deals, and doesn't take a lot of time, right? All I got to do is focus my efforts on getting a deal done, and I don't have to do 50 deals. I don't have to do 10 deals, 12 deals, 20 deals. This is the point I'm trying to make here. So, and again, let me just say that none of these numbers are guarantees. Okay. However, I can tell you that the results are not unusual for those people who follow our system, do the work, and stick with it. These are actually real numbers. And an example of this working is this Russ Cannon on the left and his partner Ryan Kindred on the right. They just closed on a $4.3 million self-storage facility. Now, I know we're talking about multifamily, but the truth is that our students actually apply syndication to different asset classes. It's just that a lot of people have a closer association with multifamily, and that deal paid them a $130,000 acquisition fee. Now, they both have 6-figure jobs at a company. They're very busy. They lead teams, and they decided to not yet quit their job, even though theoretically they could. And I have kind of maybe advised them to consider doing it, because if you can focus full time on this, you're actually able to scale this much faster. And it's most likely that they're probably going to wait till their second deal to pull the trigger on it for both of them, which is pretty cool. But they could do it now if they wanted to. So this is one of many, many examples of why multifamily is the ultimate wealth builder. Not only can one $4 million deal pay $120,000 at closing, but it can generate $600,000 over 5 years, which is pretty cool. But again, you're not going to stop there. If you can do a $4 million deal, then you can probably do another. So if you buy another one a year, you could generate $3.1 million over 5 years, right? And if you can generate $3.1 million over 5 years, that's $50,000 per month. That's wild, right? Think about that. These are enormous numbers, and I'm not doing a lot of deals. This is why, again, this is such a powerful wealth builder. Now, again, you might be like, well, my gosh, how do I do it? We're going to cover that. I'm building the case right now. I'm just showing you what's possible with real estate and what you can imagine. Pretty powerful stuff, right? So if you take just one thing away from this video, let it be this: multifamily syndications let you scale your real estate portfolio and your income without scaling your workload, without using your own money. And once you understand that model, you'll never look at single family homes the same way again. So in the next video, I'm going to compare multifamily against a bunch of strategies: flipping, BRRRR method, long-term, short-term rentals, other strategies. And we're going to grade them across 6 key criteria that you should always use when you're looking at any kind of investing strategy. Run it through these 6 and see how it does. And if you're already thinking, shoot, I want to do this, but I might need some help getting started with apartments, well, that's what we do best. We've helped hundreds of busy professionals get their first deal done faster and with fewer mistakes. So if that's you right now, go ahead and book a call with us and see how we can help you get your first deal done. With that, let's get into the next video.